You know when you look at an old bill and just get lost in all the different taxes? VAT, service tax, excise duty, it was kind of like a maze. Well, what if I told you that one single word managed to sweep all that confusion away? So today, we're going to pull back the curtain on that one word, supply. And trust me, by the end of this, you'll get the absolute foundation of India's GST.
Yeah, before GST came along, buying anything felt like you were navigating this crazy chain of taxes. The price tag was just the starting point. You had one tax for making the thing, another one for selling it, and maybe even a third if a service was part of the deal. It was just a total mess, honestly. But the fix that GST brought in, it was actually kind of brilliant in its simplicity. It replaced all those different taxable moments with one single, powerful concept. It boiled everything down to one word that holds up the entire system. Yep, you guessed it. That word is supply.
All right, so here's our game plan. We'll kick things off with the old, confusing system, then reveal that magic one-word solution. We'll break down its three core parts, look at some really interesting exceptions where free isn't exactly free, figure out what's not a supply, and finally, we'll untangle what happens when you buy things that are bundled together. Sound good? Let's do it.
Okay, so let's dive right in. The biggest headache with the old system came down to a really simple question that had a very complicated answer. What are we even taxing here? Was it the act of making something, the moment it was sold, or when a service was delivered? See, every single one of these was its own separate taxable event. It triggered a whole new tax. Think about it, one single product, just trying to get from the factory to your house, could get hit with excise duty, then VAT, and maybe even other taxes just for crossing a state border. It was a total nightmare of paperwork and, you guessed it, tons of legal battles.
So GST's big idea was to just scrap all of that, get rid of all those different triggers, and replace them with one single all-encompassing trigger. And that trigger is the act of supply.
So now, under GST, we don't really care if something was manufactured or sold. We just ask one simple question. Was there a supply of goods or services? If the answer is yes, then GST might come into play. I mean, this is it. This is the bedrock of the entire GST system. Okay, so that's the big question, right? How do you know if something actually counts as a supply? Well, the law actually gives us this super handy 3-point checklist. Think of it like a 3-pin plug. All 3 pins have to be connected for the power to flow, or in this case, for GST to apply. All right, here they are. First, the transaction has to involve goods or services. Pretty straightforward. Second, there must be consideration, which is just a fancy way of saying someone has to pay for it. And third, it has to happen in the course of business. For most day-to-day transactions, you need to tick all 3 of these boxes.
Let's break that down. Pillar number 1 is pretty simple. Goods basically means any kind of movable stuff. And services? Well, the law has a clever way of defining them. It's anything that isn't goods, money, or securities. So yeah, that covers a whole lot of ground.
Next up, Pillar 2, consideration. This just means there has to be a quid pro quo, something for something. But here's the cool part. It doesn't have to be cash. Let's say you're a web designer, and you build a website for a new phone company in exchange for their latest gadget. That's a barter. And the value of that phone, that's your consideration. And that brings us to our third and final pillar. It has to be in the course of business. This is a super important one because it's what separates a business deal from you just selling your personal stuff. Like, if you sell your old car to a friend, GST doesn't care. Why? Because you're not in the business of selling cars. But if a car dealer sells that exact same car, oh yeah, that's a supply, for sure.
Okay, so we've got our 3 pillars. But what happens if one of them is missing? Specifically, what if there's no price tag, no consideration? Can something you give away for free ever be considered a supply? Well, get ready for a plot twist because in some very specific cases, the answer is a big yes.
And this is where the law gets really interesting. It introduces this concept called a deemed supply. Basically, these are special situations where the GST Act says, you know what, even though nobody paid for this, we're going to deem it to be a supply anyway. This is a huge deal because it stops businesses from finding loopholes by just calling something free.
And this is a great way to see the difference. A normal supply, it needs a price. That's the trigger. But a deemed supply, nope. Price is not required. The law is basically stepping in and saying, look, in these few cases to keep things fair and square, we're treating this as a taxable event, period.
So, what are these special cases? Let's look at some of the big ones. For example, imagine a company bought a machine and claimed a tax credit on it. If they later just give that machine away permanently, the government says, that's a deemed supply. Another classic one, a company moves stock from its factory in one state to its showroom in another. It's the same company, so there's no sale, but it's still considered a supply between related parties. Oh, and here's one for you. If your boss gives you a gift worth more than 50,000 rupees in a year, yep, that's also a deemed supply.
All right, so we know what is a supply and what can be deemed a supply, but it's just as crucial to know what isn't a supply at all. The law is actually really helpful here. It creates a negative list to make it crystal clear what falls completely outside of GST.
And here are some of the heavy hitters on that list. Your salary from your job, that's not a supply. That's just you working for your employer as part of your employment. And what about selling land or a building that's already finished and has a completion certificate? Nope, also not a supply under GST. These rules really help draw the line in the sand.
Okay, let's switch gears and talk about something we see all the time, package deals. You know, when you buy a gift basket for a festival, or even just a new phone that comes with a charger and cable in the box. How in the world does GST work when there are multiple things sold for one price? Well, the law has a really smart way to handle this.
It all comes down to splitting these bundles into two categories. First, you have a composite supply. Think of this as a natural bundle. Things that just belong together in the ordinary course of business. A great example is getting a laptop with its charger. On the other hand, you have a mixed supply. This is more like an artificial bundle, a collection of things that could easily be sold on their own, but are packaged together for a single price. That festive gift basket is the perfect example.
And why does this matter? Well, it completely changes how they're taxed. This is the crucial part. For a composite supply, like that laptop and its charger, the whole package gets taxed at the rate of the main item, the principal supply. So it's all taxed at the laptop's rate. But for a mixed supply, that gift basket, the rule's totally different. The entire bundle gets taxed at whatever the highest tax rate is of any single item in that basket. So if the drink has a higher tax rate than the chocolates, the whole basket gets taxed at that higher rate. It's a really important detail.
And there you have it. The simple yet powerful idea of supply is the engine that makes the entire GST system run. It's what took that tangled mess of old taxes and turned it into something much more logical. So from the coffee you bought this morning to the phone you're probably holding right now, a supply is happening all around you. The real question is, now that you know the secret, can you spot all the supplies happening around you today?